All right, if you're a business operator, you know this feeling all too well. You're constantly torn between managing the day-to-day chaos and trying to prep for the future. So today, we're going to chart a clear path from that cash flow madness all the way to being M&A ready.
Have you ever looked at your books and just thought to yourself, do I have to choose between going bankrupt or going completely insane? Trying to play these accounting games that feel totally disconnected from the reality of your business. Well, you are not alone. And this right here, this is for you.
Okay, so here's our roadmap. We're going to kick things off with the big dilemma every operator faces. Then, we'll dive into a simple dual-layer solution and give you a super practical M&A-ready checklist. After that, we'll cover what buyers really ignore, and we'll wrap up with the true role of AI in all of this. All right, let's dive right into the core problem here. To survive day in and day out, you have to be obsessed with cash. It's king, right? But the moment you need to talk to a bank, a partner, or, heaven forbid, a potential buyer, that same focus on cash can make you look like a total amateur. It can even hide what's really going on in your business.
You see, the fundamental problem here is that cash lies. It lies because of timing. Think about it. Let's say your annual property tax bill is due in January. So, what does your December profit and loss statement look like? Amazing. But is that the truth? No way. You were racking up that expense every single day of the year before. That's exactly what accrual accounting is for. It matches expenses to the right period, fixing these distortions.
And that, right there, is the classic tug of war. On one side, you've got cash accounting. It's simple, it's fast, it's exactly what you need to survive. And on the other side, there's accrual. That's what gives you the real economic story, the credibility. But man, it can feel so complicated and stressful. And that tension is the source of so much pain for operators.
So what if I told you that you don't have to choose? What if you could have the best of both worlds? That's what we're talking about next, a super practical solution to get you there without what our source here calls accountant brain damage.
And here it is, the big secret. The answer is not to force yourself into full-on accrual mode 24/7. That is a recipe for total burnout. The real answer is a much smarter, two-layered approach that actually respects your need to, run the business.
Okay, so layer one. Think of this as your home base, your command center. This is your cash operating ledger. This is where you live every day asking simple questions, like, can I make payroll? How much cash do I actually have? It's simple, it's fast, and it's exactly how your brain is already wired to think.
Now, layer two, this is like your formal wear. You don't wear a tuxedo every day, right? You just put it on when you need to look sharp. That's this layer. Once a quarter, maybe once a year, you make a few big-picture adjustments to translate your real-world cash story into the language that banks and buyers actually speak. That's it. No daily accounting gymnastics. Okay, a common question is, well, where does something like Profit First fit into all this? Here's the key. Profit First isn't an accounting system. It's a cash governance system. It's a set of rules to keep you from spending money you don't really have. The accrual overlay, on the other hand, that's your reporting system. It's there to protect you from those nasty hidden liabilities. They're different tools for different jobs, and they work perfectly together. All right, let's get down to brass tacks. This is your M&A ready checklist. We're talking about the absolute minimum you need to pass diligence without having to turn into a full-time accountant. Seriously, this whole process should take you like 10 minutes a quarter. That's it. 3 simple steps. First, accrue what you already know is there, like the interest on a loan. Second, fix any huge timing gaps, like that big annual insurance payment you made up front. And third, just perform a quick sanity check. Ask yourself, am I being honest here? Am I hiding anything?
Now get ready, because this might be a little shocking. This right here is pretty much all you need for your chart of accounts. That's it. You do not need 200 categories. If your accountant hands you a printout with that many lines, you need to have a little chat. Simplicity is the goal here.
Okay, now for my favorite part, let's talk about all the stuff you can just stop worrying about. All the things a smart buyer is going to ignore or reverse during their analysis anyway. This is going to save you so much time.
Look, they don't care what you pay yourself. They're just going to adjust it to a fair market salary in their model. They don't care about your internal Profit First transfers. And all those clever tax strategies, like writing off a new truck in 1 year, gone. They'll reverse it to see the true underlying profit. The bottom line is, stop wasting your energy on this stuff.
So if they ignore all that, what do they actually care about? Well, these things. These are the big ones. They're going to make sure your interest and property taxes are handled correctly. They'll pore over your debt structure, and they will absolutely scrutinize any deals between your business and other companies you own.
Get these few things right, and trust me, you are miles ahead of most other sellers out there.
All right, time to talk about the robot in the room, AI. What's its role in all this? The key here is to think of AI as a ridiculously smart intern, not the new CFO of your company. It's a helper, not a savior.
AI is an absolute beast when it comes to calculation. It can run interest accruals or amortization schedules in its sleep. But what it can't do is exercise judgment. It can't understand context. Only a human, you, can look at a $50,000 legal bill and know, hey, that was for that one-time crazy lawsuit, versus that's just our ongoing legal cost. That one decision can dramatically change the valuation of your company, and an AI just can't make that call.
And this quote just nails it. AI tells you what happened. Only you, the human, the operator, can decide what it actually means. It gives you the data, you provide the wisdom. So if you remember one thing from all this, let it be this golden rule. Cash determines if you survive. Accrual determines if you're credible. They are two different tools for two totally different jobs. Do not ever confuse the two.
Okay, so you've got the playbook now, and I want to leave you with a simple question. Don't try to boil the ocean here. Forget about a massive overhaul. What is the one small 10-minute thing you can do this quarter to start building that M&A ready layer on top of your business and prepare for whatever comes next?